All right, so today we're going to be taking a deep dive into office space solutions.
Okay.
You want to get a handle on their business model and how's the industry looking and what they've got planned and what risks they might run into.
Okay. Sounds good.
We're going to be using their Q2 and H1 FY25 earnings call transcript, which is from November 12th.
All right.
So this is hot off the press, and we want to pull out the insights that matter to you.
Sounds good.
So to kick things off, Office just crossed a major milestone, hitting over 110,000 operational seats across India.
Wow.
And they're making moves into tier 2 cities like Guwahati.
Interesting.
And they're even launching a new luxury brand called Elite.
Fancy.
I know, right?
Yeah. So Office is a great example of a company really taking advantage of all the changes happening in the workspace market.
Yeah.
So let's break down how they're actually making money.
Okay.
At their core, they provide flexible workspaces, which is a mix of co-working spaces and managed offices.
Right. So they're giving people and companies the freedom to choose the workspace that suits their needs without being tied down to traditional long-term leases.
Exactly.
Well,
and their revenue comes from two main places.
Okay.
First, you have the co-working and allied services segment, which is exactly what it sounds like, providing desks, meeting rooms, and all those extra perks that come with co-working.
Okay.
This segment's seeing phenomenal growth, a whopping 43% year-on-year increase.
Wow.
Then there's the construction and fit-out projects, or design and build.
Okay.
This is where Office designs and builds custom workspaces.
Okay, so they're not just providing this space, they're creating these whole workspace experiences.
Very accurate.
I see.
Yeah.
But here's what I find interesting.
Okay.
Office doesn't actually own most of the properties that they operate.
Right.
They've got this managed aggregation model, which sounds a little different.
Yeah, it's a very clever strategy that really sets them apart.
Yeah.
Instead of buying or leasing properties, which can really tie up a lot of money,
Yeah.
they partner with the space owners.
Oh, so they take on the design management and filling the space and share the revenue with the property owner.
Precisely.
I see. So it's kind of like a hotel management company.
Yeah, exactly.
They don't own the building, but they're running the whole operation.
Exactly.
So they're minimizing their risk and maximizing their flexibility.
Yeah.
That's going to be a major factor in that 73% return on capital employed.
Absolutely. This asset-light approach lets them scale really quickly and efficiently.
Yeah.
And by avoiding those massive upfront costs of owning real estate, they can put their resources towards growing and innovating.
I see.
It's a key reason their ROCE is so much higher than a lot of traditional real estate players.
That's a pretty impressive figure. It makes you wonder if this is a model that other companies might try to replicate.
It's certainly getting attention, but let's zoom out a bit and look at the bigger picture of the industry.
Okay.
So while the overall Indian office space market is growing at a good pace, the flexible workspace segment is just exploding.
Yeah, I've been hearing about this boom, but the numbers are pretty mind-boggling.
They really are. Projections show the flex workspace market hitting a massive Rs, $380 billion by 2028.
Wow.
That's a compound annual growth rate of about 35%.
Wow.
And just last fiscal year, flex space leasing accounted for a full quarter of all commercial real estate absorption.
So Office is really riding a massive wave here.
They are.
So what's driving this crazy growth? Why are flexible workspaces all of a sudden so popular?
Well, there are several factors.
Okay.
Flexibility is, of course, a major draw, especially for startups and smaller businesses who need to be able to scale up or down without being stuck in these long leases.
Makes sense. The traditional office model doesn't really work in today's fast-paced world.
Exactly. Then there's the element of customization. Office designs workspaces that are not just functional, but they also reflect a company's brand and culture.
Okay.
And let's not forget about the rise of Global Capability Centers, or GCCs, in India. These GCCs often need really high-quality, flexible workspaces, and Office is in a perfect position to cater to their needs.
Right, so it's like a tailored solution rather than one-size-fits-all.
Exactly. And we can't ignore the growing number of companies adopting hub-and-spoke office strategies. So companies are moving away from these giant centralized offices and setting up smaller, more spread-out workspaces.
Okay.
This gives their employees more flexibility and choice in where they work.
So it's all these different trends pointing in the same direction towards a more flexible, dynamic, and personalized workspace. And Office is leading this whole shift.
They really are. But the question is, how are they planning to take advantage of all this?
That's what I want to know. Let's dig into their plans and see what strategies they're cooking up.
All right, let's do it. So it seems Office isn't just sitting around. They're aiming for a pretty big target, 135,000 operational seats by March 2025.
That's a huge jump from where they are now. How do they plan to get there? What's the plan?
One of their key strategies is going into Tier 2 cities.
Okay, we touched on Guwahati earlier.
Yeah.
Why there?
Well, Tier 2 cities are seeing a lot of growth, and the need for good workspaces is going up.
Makes sense.
Guwahati is also a gateway to Northeast India,
Right.
a region with huge potential plus lower costs compared to the big cities, and they've got good government policies that help businesses.
So Office is getting in early and getting ready for that wave of development.
Exactly.
It's like they're going into a market that's ready for change.
Yeah.
But expanding into new places is just one part of it. What other strategies are they using?
They're also changing up what they offer to appeal to different types of customers.
Remember that Elite brand.
Yeah. Tell me more about Elite.
So Elite by Office is all about a better workspace experience.
Okay.
Think prime locations, amazing design, and special amenities.
Sounds fancy.
It is. They're targeting GCC's high-end clients and basically anyone who wants that premium feel.
So they're not just offering space, it's more like a whole vibe.
Exactly. And of course, you pay more for that, which means more profit for them. It makes sense. If you're offering something special, you can charge more. But isn't there a risk that Elite could take away customers from their regular offerings?
That's a good point. It's something they'll have to be careful with. But it seems like they're making Elite a separate thing aimed at a different group of customers.
Right.
So they're growing their market instead of just moving their existing customers around.
So they're making a whole new area within the flexible workspace market.
Yeah.
But no business is perfect. What challenges do you see coming up for Office?
Well, one of the big risks, especially with their managed aggregation model, is occupancy risk.
Yeah, because they don't own the properties.
Yeah.
Right? They have to get enough customers to fill those spaces.
Exactly.
So what happens if a big client leaves? How do they deal with that risk?
They're really careful about their research.
Okay.
They look at trends, they see how much demand there might be, and they pick locations strategically. Plus, they make deals with space owners that protect them.
So it's all about reducing risk by planning carefully. But what about competition? There are a lot of companies in the flexible workspace market these days.
It's true, competition's heating up. But Office has some advantages.
Like what?
Well, their network is huge. They're in 57 micro markets and 180 centers across India.
Wow.
And they're growing fast, especially in those Tier 2 cities. This network is really attractive to clients who want options.
It's like a whole world of workspaces.
And their clients are really diverse too, from big companies to small businesses, startups, and even freelancers.
That must help spread the risk.
It does, and it also gives them great insights into what different customers want and how those needs are changing.
It's like they're always getting feedback so they can adapt and improve.
Exactly. And don't forget their unique approach with managed aggregation.
Right.
It makes them more cost-effective and lets them be flexible.
So they can enter new markets faster than traditional real estate companies.
Exactly. They're not just competing on space, they're competing on how they do business.
So they're changing the rules of the game.
And their financials are doing really well, which shows that the strategy is working.
It's impressive. They're growing and making money.
And that brings us to the big question. Are they actually making money with all these moves?
Okay, let's look at the numbers. It seems like Office is doing pretty well. They're showing good revenue growth and even better EBITDA growth.
Yeah, their revenue for Q2 FY25 was Rs 292 crores. That's a 40% jump from last year. And their operating EBITDA went up to Rs 100 crores. A big 67% increase.
Those are some impressive numbers.
Yeah.
And their EBITDA margin's growing too, up to 34.3%. Looks like their strategies are working, but are they actually making a profit?
They are. For Q2 FY25, they reported a profit after tax, or PAT, excluding exceptional items of Rs 15 crores.
So that's a big turnaround from the loss they had in the same quarter last year.
Exactly. It's clear their growth is turning into real profits, and as they keep scaling and using their asset-light model, we should see even better profitability.
That's good news for investors. But what about their decision to sell off Office Care, their facility management business? That seems a bit different from what they usually do.
It might seem that way, but it's actually a strategic move. It goes along with their goal of being the top player in the flexible workspace market.
So by selling Office Care, they're focusing on what they do best.
Exactly. Designing, building, and managing great workspaces.
So they're going all in on their core strengths.
Yeah. And it lets them free up resources to invest in things like expanding their network, developing new products, and improving their technology platform. It's all about staying ahead of the game.
Right. We talked about competition before. How is Office planning to not just survive, but do really well in this market?
They're playing to their strengths. Their size and scale give them a big advantage.
Right.
They're already in 57 micro markets and 180 centers all over India, and they're expanding fast, especially in those tier 2 cities. This network is a big plus for clients who want lots of options.
So they're kind of creating a whole system of workspaces with something for everyone everywhere.
Right. But size isn't everything. What else makes them stand out? Their diverse client base is a big factor. They've got clients at all sizes, from big companies to small businesses, startups, and even freelancers.
Okay.
This not only helps spread the risk, but it also gives them a good understanding of what different parts of the market need.
So they're always learning and adapting.
Yeah, and let's not forget their special managed aggregation model.
Right. That's a game changer when it comes to cost and flexibility.
Definitely by partnering with space owners, instead of owning everything themselves, they can grow quickly without needing a ton of money. This lets them be flexible and adapt to changes.
So they're not just competing on space, they're competing on how they run their business.
Exactly. And their strong financials prove this strategy is working. They're showing you can make money and grow at the same time.
It's a really interesting story of a company that's riding this wave of change in the industry, always adapting and innovating to stay ahead.
Definitely a company to watch. They're leading the way and shaping the future of work in India as the lines between work and life get blurrier. It'll be interesting to see how they keep changing and creating workspaces that meet everyone's needs.
We've covered a lot today, from their business model and growth plans to the competition and their financials.
We've talked about their strategies, their strengths, and the risks they face, but there's always more to the story.
Office is always moving, always trying new things, and changing how we think about workspaces.
So as you follow them, keep asking questions and see how they handle the challenges and opportunities that come up.
And that's what the deep dive is all about, giving you the knowledge and insights to spark your curiosity. We'll be back soon with another deep dive into a new topic. Until then, keep learning and exploring.